Okay, we'll bring you another story on PE funds and also foreign developers. In 2005, development of integrated townships, built up infrastructure and construction projects were open for 100% foreign direct investment or FDI. The start or the beginning was a little slow, but in the last few years, the sector has witnessed a significant traction with once foreign private equity players turning developers as well. Ruchira Sharma captures the new wave.
In the next decade, the growth of the real estate sector in the country is pegged at a mouth-watering 30% per annum, according to varying industry estimates. This magic number is an attraction enough for international players who can sense a big opportunity in a country which has more than 50% of its billion-plus population under the age of 25. A constant rise in the demand for residential and commercial projects in the real estate sector have led some big international developers to set shop in the country. Some reforms by the government like easier FDI policy, rationalization of stamp duty and property taxes were the starting point for the foreign interest in Indian realty.
Foreign developers had started evaluating India opportunity almost a decade back when the government opened up the Indian real estate sector for foreign institutional and direct investors. So one of the biggest things that is attracting them towards India is the size of the market opportunity.
A slew of international developers have made their foray in the country over the past few years. Southeast Asian firms like Ascendas and Capitaland were the first to jump on to the Indian real estate story, while Tishman Spear was the first US developer to invest in the country in the year 2005. Private equity funds followed soon, with IREO turning into a developer, followed closely by SARE Homes. Funds opt for the developer route to exercise better control over processes and delivery in the still chaotic industry. Another international real estate firm which has taken a giant leap in the Indian commercial real estate is Hines.
When we come into the market, what we typically bring to the market is the expertise and the quality of building the most number of landmark buildings in the world.
It is amply clear that the presence of international developers and real estate private equity funds in the country does encourage the implementation of the best international practices by bringing in more accountability and more transparency to the table. The question remains whether the Indian real estate sector is evolving fast enough for their continued presence.
One is that land acquisition is a complex process. The second broad category is about approvals process, and the third one is about infrastructure.
We would like is an easier exit for the capital coming into the country by allowing foreign institutional investors to buy these buildings. That's good for the product, it's good for the market, it's good for FDI in the country.
Clearly, the real estate sector in India is a big draw, and in spite of the fragmented and unregulated nature, it seems that the international developers are here to stay.
The scale of the opportunity is immense, and the underlying demand for the product supports it through lean times and difficult times.
I believe that foreign developers are here to stay. They, in a sense, control their destiny.
With international players making a beeline for India, buyers are likely to emerge as winners. Since delivery on time is the biggest goal that these players strive for. Secondly, more competition always leads to better quality, if not always better prices. Ruchira Sharma for NDTV.
You know, Samir, strangely, we are seeing a lot many more private equity firms turning developers. 2011 real estate sector actually attracted the highest amount of FDI. But January to March, the figures look so patchy and they're so down. So it's extremely cyclical, or I mean, what really gets them attracted to the market? What puts them off? Is it the big India story which is looking shaky right now?
So if you look at global real estate markets, they haven't actually returned any kind of appreciation to its investors, right? America has just been going down. There is the huge global issues with respect to Europe. So even if India actually gives you a return of 10-15%, I think they should be very happy net of dollar appreciation,
The
depreciation,
rupee
right?
depreciation as well.
Which is actually really possible in this country. But the expectation, because you can't predict dollar versus rupee pricing, the expectation is 25% post-tax. That is actually what is restricting a lot of good private equity funds still to come in, and there are only a handful really left. And when additional money starts to flow in, say in 2011, they actually, and these are long-term funds. When they come in, they're about 6 to 10 year horizon. So they would like to wait and watch for a year to 2 years to see what is happening, judge the markets before they start to put their money in.
The big money, the way SARE or IREO has done. All right, so that's the private equity and the FDI business within India's real estate sector. January to March, the figures have plunged quite a bit. Hopefully, the monies will return. When we come back, we'll continue to take all your questions.